Now, what better time to learn how to short sell when the market is pulling on back? What's going on, team? It's Ricky with Technical Solutions. I thought that I would make this video because I find it to be very important to talk about, especially more now than ever before. I'm going to start sharing my screen so you can see exactly what it is that I'm looking at. This is Apple. I think Apple is just a really good example of, a stock that's super consistent, one of the market leaders, if not the market leader for one of the companies that's with the highest market cap valuation. And not a stock necessarily worth shorting, but even with something as, bulletproof as Apple, it still pulls back and it still has experienced a pretty rough year for 2022. And I thought because of this being such a rough year, I would share with you some of the values of being able to short sell and kind of an introduction to this. So a quick little reminder, if you are part of Learn Plan Profit, I just added a new section to Learn Plan Profit 2.0, and it goes into much more detail about this when it comes down to short selling and what to expect and how to prepare and how to be able to properly do it, especially if you're an absolute beginner. So one of the things that I want to talk about is, what is short selling? Well, when you invest in a company, your expectation is for that company to grow in value, right? You make money as that company grows in value. You buy it at 100 shares, you hope that it goes to 105, 110, right? When it comes down to short selling, you actually make money as the stock sells off. So as it loses value, you make money. So it's called selling short. And some trading platforms allow you to do this, some do not. You can see my buy button, you can see my sell button, and then you can see my short button. Pretty much what that means is you actually sell the shares first. So you're borrowing shares, you sell the shares first, and then you buy them back to cover. So let's say that you would have started short selling Apple at 175. Let's say that you were a magician. You just knew that Apple was going to sell off, right? At 175, you knew that the market was going to pull on back, or you had an assumption of why it was going to pull on back. Maybe you knew that the Federal Reserve was going to raise interest rates. By raising interest rates, it cuts back on expansion, making it more expensive to run a business. Therefore, markets were going to pull on back. Let's say that you expected this. As Apple begins to sell off and lose value, because you began to short sell, you would actually make money on the way down. So let's say that you would have got in at 175. As of right now, based off of it currently trading at 138, you would have been up 21% when it came down to your short position. Now, we all know long term, the market always recovers. I want to make sure that we get that very clear. I am always focused on investing long term. I think right now is probably one of the best times to learn how to invest and or prepare to invest, because right now there's companies like Apple that are so oversold and so undervalued based off of what's been going on because of the uncertainty, because of the interest rates, right? Because of inflation, that it is kind of scary to invest right now, long term, with all of this uncertainty. But we all know that, right? That every previous recession is viewed as a missed opportunity, but it's every current recession that's viewed as a risky time to invest. But it's just because we can't see the future. You just have to trust yourself, trust the process, right? So we could see that if Apple being at 138, 137, if it makes a full recovery to previous all-time highs, that would be nearly a 32% gain. So you could see why investing long-term is great, but also just if you're an investor, doesn't mean that you have to sell those positions. This is where short selling comes in, right? Let's say that you invest long term because you believe in Apple with like $10,000. Like that is your bread and butter. That is a company that you buy and you hold. And right now, let's say you're loading up on it, right? The cool thing about short selling is you don't have to sell your shares that you're invested in, right? You can continue to hold those shares. You can buy more as it sells off. But the great thing about short selling is if you think that the market's going to continue to sell off, and or if the market is proactively selling off, as we've seen for all of 2022, then you can take a short position. And you don't even have to take even a short position on Apple. But you could even, I wanted to share this with you. It's the whole reason I'm making this video. You could have taken a position on SQQQ. So did you know that SQQQ is a bear ETF? So if you thought that the NASDAQ market was going to sell off, this is an inverse ETF. So this one goes up when the NASDAQ market goes down. So it's actually pretty cool, right? This one's triple leverage, so you have to be careful with that. So this one goes up 3% for every 1% that the NASDAQ market drops. And you can see that based off of recent patterns, the NASDAQ market has been dropping. And guess what has been happening with SQQQ? It's been going up. So instead of short selling, you can buy an ETF that is a short, you can see right here. So it's an Ultra Pro short ETF, and this one goes up without you know, you having to actually borrow shares to short. And again, I explained that in a little bit more detail of what it means to borrow shares and short interest in the Learn Plan Profit 2.0 update. But I wanted to give you a very quick example of maybe if you don't want to short sell because of those borrow fees, then maybe you can get into trading and or putting in money in these short ETFs. Obviously, these are not investment vehicles. These are not something that you want to buy and hold for a long period of time. But you can see that just based off of, the past month, something like SQQQ in a perfect world, you can see right on over here, it has gapped up over 80%. Think about that. How cool would it have been to have been able to make money when the market is dropping? It's kind of like a superpower, right? You obviously don't want to abuse it because obviously the market's going to recover at one point or another. But with that being said, it's good to understand how you can make money when the market is selling off, right? SQQQ is just one of those examples. There's actually SPXS, if I'm not mistaken, which is the bear ETF for the S&P 500. So let's say that you're not a big fan of the NASDAQ. Maybe you're a bigger fan of the S&P 500, which is the top 500 most valuable companies that are publicly traded, right? This is the S&P 500, and this is the bear ETF that's triple leveraged. So this one goes up 3% for every 1% that the S&P 500 drops. So you can see from overall lows to current highs, this thing saw a 68% return. Now, again, don't get too excited. I mean, the market's already very oversold, so it might not be the best time to jump into these. But with that being said, that's not the point of this video. The point of this video is I want you to understand where you can put money when the market is selling off, right? It's not that you need to right now, but it's good to have the option if you wanted to. And again, as long as you understand that these are not long-term investment vehicles, because you don't want to get caught back holding something like this as the markets tend to recover. And when the markets recover, then these ETFs will continue to sell off. So you have to be very selective on when you choose to either short sell something and or go into one of these positions of these bear ETFs. And there's also UDOW and SDOW, and it's going to be SDOW that I believe is the short ETF. Yeah, so this is for the Dow Jones. So we talked about NASDAQ, which is SQQQ. We talked about SPXS, which is the S&P 500. And now we're talking about SDOW, which is the Dow Jones Bear Triple Leverage ETF. And you can see that this one is also up 60%. So again, you have options. You can short sell a stock if you think that it's overvalued, and just do that on the traditional side of things. But if you don't want to short sell and incur borrow or short fees, then again, maybe you can just pick one of these ETFs if you find it to be more suitable for you, right? As long as you understand that it's not an investment vehicle, as long as you understand that markets will always end up recovering, it's just a good way to be able to understand how to hedge your position. And again, I explain this in much more detail in the short selling section of Learn Plan Profit 2.0. And again, this section was just added, as well as the new path dependencies and ETF cycles. Again, if you're just getting into the stock market, friendly reminder, I work with my private group every day. They get to watch me trade live every single day. So I trade live not once a week, not once a month, but literally every single day right at market open. My team gets to watch me buy, watch me sell. I explain what it is that I'm doing, why it is that I'm doing. I explain my thought process behind the trade, regardless if it's good or bad, depending on the trade, right? The whole idea is being able to have access to me every single day. And again, this is my Learn Plan Profit 2.0. You get access to the A to Z video lesson library that's designed for complete beginners. That's what I just showed you. Our private daily live trading sessions, our private group chat. And yes, you also get access to our TechBud HQ, which is a 7,000 square foot office space located in Chandler, Arizona. And you get access to all of this. Right now, it's $150 off. So again, the second link in the description, it's Learn Plan Profit 2.0. It's our biggest discount and biggest sale that we offer. And right now, it's $150 off. And again, that's that second link in the description. And you can watch me trade live as soon as Monday when the market opens. So again, I'm very excited for the market to begin to recover. But I just wanted to make sure that even if the market does end up getting worse, you don't have to be in fear of that, right? Even if you have your long-term plays, it's great to keep them. It's great to add more to them during these oversold levels, but it's also great to understand that you can make money during down markets. And that's the whole purpose of this video, is I want you to be aware of how you can. So I wish you guys nothing but the best. If you have any questions for me, I can answer any of your questions via Discord, and that's that first link in the description. And make sure if that you guys want to stay up to date with what it is that I'm doing, that you guys follow me on Instagram, and that's that third link down below. This is the Webull trading platform. That's the fifth link in the description if you want to use it, and you will earn 12 free stocks if you use my link and you deposit $1, and I will earn 1 free stock. So I really do appreciate you guys' time. Hope and wish you guys nothing but the best. Like always, let's make sure that we end the year on a green note. Take it easy, team.